Hello guys, good evening. Welcome to this second class. So we are going to be recapping for what we did yesterday, and then from there we'll move on to the business of today. So I'll start from the first class, which was Introduction to Candlesticks, and then I will we'll just we'll just recap everything again we did from beginning to end. Then we start this today's class. So I'll be sharing my screen, sharing this. So I hope you all can see my screen. So yeah, we have just like 40 minutes to the class. So let's see how much we can cover within this limited time. So in the first class, we talked about candlesticks, where I mentioned that candlestick we have a high of a candlestick. Like candlesticks are formed using a high, a low, a open, or a close. So then I gave example of two particular candlesticks, which are the bearish candlestick and the bullish candlesticks. So for a bearish candlestick, we are going down in price, while for a bullish candlestick, we are going up in price. So it's just like a human body now, so we grow. So while we are growing, or maybe I can give an example, like you go to the market to get something. At some point, you go to get something and then maybe the price goes higher. And then maybe another time again, you go to the market and the price of that particular goods or item you are about to buy, the price have come down in the market. So that's just this. And I told you that candlestick is a visual representation of price in the financial market. So it's just candlestick are used to tell the price of of that currency pair you're trading at that particular time. So I just want to use like 15 minutes to revise everything that we did on the first class before moving using the main 25 minutes to the other classes. So now this is an example of a bearish candlestick, and I told you bearish candlestick is formed using a high or a open, a close, and a low. That means we open at this point here because it's a bearish, so bearish means say we are going down with price. So we open at this point here, and then because the financial markets, either you're buying or you're selling. That's the only two things you can do in the forex markets. Either you're buying or you're selling, and at every candlestick that is forming, there's always a fight between buyers and sellers. So the psychology of the formation of this bearish candlestick is that price open at this point, right? So when price open at this point, buyers stepped into the market because I told you it's a fight between buyers and sellers at that particular time frame that you are on. So this is a particular time frame, for instance, and now this the open price of this candlestick. Now, when the price open at this point, buyers step into the market, push the price all the way to this top here, right? Push the price all the way to this top. So here now is the highest point the price went to because they could not continue pushing the price up like this. This was the highest point the price went to. Then sellers step into the market again. They try to flex their muscle, push the price all the way to this point here, which is the lowest point price went to. And then buyer step into the market again, push the price all the way to this top here, and it closes at this point. So meaning we're going down with price. We open above and we're closing down, meaning we're going down in price. That's for a bearish candlestick. And then for a bullish candlestick, we open below and close above. So this was our open. This was where price opened at this point, right? And then the moment price open, what happened here was as price opened at this point, immediately sellers step into the market, push the price all the way to this point here, right? Push the price all the way to this point here, but they could not continue pushing it down like this. Then buyers said, no, this is not going to happen. And they step into the market, push the price all the way to this top here, which is the highest point the price went to. And then sellers step into the market again, push the price all the way to this point, and it closes at this point. So depending on the time frame you are, if you're on the 1 hour time frame, the whole of this candlestick is going to form in 1 hour. If you're on the 5 minutes time frame, meaning that the whole of this candlestick is going to form in 5 minutes. If you're on the 1 minute time frame, meaning that the candle is going to form in 1 minute. So it just depends on the time frame you are. Every candlestick will form based on that particular time frame that you are. So I now told you that just like human beings now, we have as a human being now, we have our, like parts of our body, which is the head, the hand, the body itself, the leg, the eyes, the nose, that kind of thing. So same thing goes to these candlesticks. So the candlestick has a body and a wick, though not every candlestick has a wick. Most candlesticks just really have a body, but surely they must be the highest point the price went to, the lowest point the price, and they have to be an open and a close price, right? They have to be a open and a close price. So this for candlesticks. Then we move ahead to so there are actually different representation of candlesticks. You can see some candlestick that will look like this as well, right? You can see some candlesticks that might look like this. You get, you can see some candlestick that will look like this, like this. So still, even if you see a candlestick that look like this, it's still telling you that same thing, that price open at this point, right? When price open here, sellers step into the market, push the price all the way to this down here, but they could not continue pushing it down. The sellers say, no, this will not happen. They push the price all the way to this top here, and then we close at this point because this is a bullish candle. We are closing above the open. Same thing with a bearish candle. For a bearish candle, we are closing below the open. So now we move on to the next thing, which was candlestick patterns. And now candlestick patterns, which we gave an example of two, candlestick pattern, which is the bearish candlestick and the bullish candlestick. These are the two examples of the candlestick pattern we gave. That I told you that for a and one thing you should know about candlestick is that you can identify them easily on the chart. About candlestick patterns is that you can really identify them on the chart, right? So an engulfing, I'll give an example of a candlestick pattern. One, we gave us the engulfing candlestick. Now, the engulfing candlestick is when a candlestick engulfs a previous candlestick that formed. So this is an example of what I'm saying. So this the candlestick, right? This is a bullish candlestick. Now, you can see the bullish candlestick engulf this bearish candlestick. You can see it engulf, meaning that it covers it. And most times, a bullish candlestick can even cover more than 2 to 3 or 4 candlestick, right? But for it to be considered as a engulfing candle, it has to at least engulf one previous candle, right? It has to at least engulf one previous candle for it to be considered as a engulfing candle. But it can still engulf more than 2, 3 candles. But just for it to be called an engulfing candle, it has to engulf at least one previous candle, which was example of this. So this was a bearish candle. This was a bullish candle that engulfed this small bearish candle, right? So this is a bullish engulfing candle. So same thing with the bearish engulfing candle. This was a bullish candle first, and then this red candle engulfed, right? It engulfed this whole bullish candle. So as a bearish candle too, same thing. It can also engulf multiple candlesticks, right? It can engulf a lot of small candlesticks here. But for it to be considered as an engulfing candle, it has to at least, hear the word, it has to at least engulf one particular candlestick. So we gave example of it on the chart, which I gave example of this one, right? I gave an example of this as a bearish engulfing candle. So I told you color doesn't really matter. It just depends on the color you decide to use. So like me on my own chart, I decide to use blue and black. So you can decide to use any color. Color doesn't really affect the market, just based on how you want to understand your color or how you want to give your chart some styles. So this is an example of a bearish candlestick, and you can see this is the bearish candlestick. Look at how many candlesticks it engulf. About 1, 2, 3, 4, 5, 6, 7. About 7, close to 8 candlestick it engulf. You can see this whole fat candlestick engulf the whole of this one. But for it to be considered as a engulf, at least even if it's one, it should engulf one, which is what it did here. But this one, I told you, it can engulf more than one candle, right? It can engulf more than one previous candle. But at this point, it even engulf more than one. So this one, like this, is considered as a bearish engulfing candle. And note, when this patterns occur on the chart, especially in the upper at the top of an uptrend or at the top of a downtrend, there's always a possible reversal that might happen in the market, right? There's always a possible reversal that can happen in the market. So let's give an example. Now, if you look at this chart was going up. If you see, it was going up like this, right? It was going up, it was going up, it was going up. And I told you that when an engulfing candlestick happen, there's at the top of an uptrend or at the bottom of a downtrend, it signifies that a reversal in the market might possibly happen. So look at this now. This one happened at the top of an uptrend because it was actually going up, and then this engulfing candle happened here. And immediately it happened. Look at what happened. The price started pulling down. You can see, right? After it happened here, the engulfing candle here, it started reversing. You can see this was the reversal that happened, meaning that it's telling you that this engulfing pattern that happened at the top of an uptrend surpassed the reversal that might happen in the market, which that was what happened here. So this is the reversal that happened. So now let's give an example of a bullish candle as well, a bullish engulfing candle. So this is a bearish engulfing candle, right? This is a bearish engulfing candle. And I told you when there's an engulfing candle, either at the top of an uptrend or at the bottom of a downtrend, there's possible reversal that might happen in the market. So if it's going up, if the trend is going up and a bearish candlestick occur, there's high possibility that the price might start pulling down. Same thing for a bullish candle as well. If it happens at the bottom of an uptrend, there's high possibility that it can start pulling back up. But you don't just see these patterns and then enter the chart and then decide to place trade. No, you have to have other confluences to guide you when trading it. So now this is an also example from here, right? So let me use an example from this point here. So you can see price here was coming down at this point, right? Okay, let me use it from here. So price was coming down from here. So you can see it was somewhere in a downtrend here, right? A downtrend, and then it happened, right? And then it happened. So you can see it engulfed. These are bullish engulfing candle. And the moment it engulfed this candle, and this one too also engulf more than one candle. So you can see it engulf. We have 1, 2, 3, 4, 5, 6, almost how many candles that it engulf. So you can see, so this is a very good indication that this is a very good engulfing candlestick. So and the moment it engulf it, look at what possibly happened. It started going up, right? It started going up, showing that yes, this you can see it started pulling up from here, meaning that it's showing that yes, there's a possible reversal that when these patterns happen in the market, there's possible reversal that it might start pulling up or start pulling down. So it happened here for a bullish engulfing, and then look at what the market started doing. It started pulling up, and then when it happened here in the bearish, as a bearish engulfing candlestick, if you notice, it started pulling down after it happened, right? After it happened, it started pulling down. But you don't just trade this based on what you see when it's from. Don't just trade. You have to have other confluences, like other things, like indicators to use or tools to use to guide whether to enter for the trade or not to enter for the trade. Now let's move to, so this is just a quick recap of what we did on the first class. So now we'll be moving to the second class now. So what we have today, we'll be talking about other candlestick patterns, right? And the first example I give is this doji candlestick. So this is an example of a doji, either this one or this one, depending on how you want to see it. So this is an example of a doji candlestick. And for a doji candlestick, we can have a bullish doji candlestick, and we can also have a bearish doji candlestick. So it just depends on which one. And whenever you see a doji candlestick, it also is telling you that there's inequality in the market. That means there's indecision between buyers and sellers in the market, right? But still, this candlestick, when it forms, right, it still have that same criteria of a candlestick, whereby it has the open, the high, the low, and the close of a candlestick. Every candlestick must have a high, a low, an open, and a close. But for these doji candlestick patterns, when they happen in the market, their open and close are about the same or even the same level in price. Okay, let me explain what I mean. Now, this is a bullish doji candlestick. Now, if you look at When the I told you for a bullish or a doji candlestick pattern, the open and the close price are the same or about the same level in price, right? So this is a bullish doji candlestick. This was our open price, right? When open here, buyer said, oh, seller said, no, okay, I'm going to step in the market to, they want to flex their muscles more. So now they came into the market when the price opened at this point, they push the price all the way to this down here, which is the lowest point the price went to. And then buyer said, no, I'm not going to allow this to happen. We are going to show them. And then they push the price all the way from this bottom, they push it all the way to this top, but they could not continue pushing it up, right? They could not continue pushing it up. Then seller step into the market, push the price from this point down to here, and then we close at this point. So if you look at the close and the open price are about the same level, because that's the characteristics of a doji. It's the open and the close are about the same level. And this, when you see this happen, it means the market is in an indecision state. That means it's not equal. There is like fight now between buyers and sellers trying to see, okay, they are like contemplating if the price might continue to go up or maybe happen as a reversal. But one thing you should notice about doji candlestick, when it happens in the top half or the down of a trend, meaning that if it happens as in an uptrend or if it happen at the bottom of a downtrend, it also signifies a reversal in the market. So when something like this happens, you should always take away and make sure that you see it clearly, so that because can also mean a reversal in the market. So you might see a doji candlestick form and you think, okay, maybe it will continue to go in that same direction. No, it can also possibly mean a reversal might happen, right? A reversal might happen. So that's an example of a bullish doji candlestick. So same thing with the bearish doji candlestick. It must also have a open, a close, a high and low. And the same characteristics is that the open and the close price are about the same or even the same level in price. For instance, this one, you can use this one. So you can see the open and the price. If you have to zoom into it, so you can see they're about almost even the same level in price. Like the open and the close are about the same level in price. So that's just an example of a doji candlestick, for whether for a bullish doji candlestick or for a bearish doji candlestick. And also we give an example of it on the chart, right? We give an example of this doji candlestick, their formation. And I told you when it happened, maybe in a below if, for instance, now if the bearish doji candles happen at the top of an uptrend, it may signify that a reversal might happen. And when a bullish candlestick happen below a down at the bottom of a downtrend, it mean that a reversal might possibly happen, but it's not 100%, right? It's not 100% that when these candlestick patterns form, they will be a reversal immediately. No, it might not really happen the way you see it. So this is an example. So let me use this one as an example of a bearish doji candle, right? So let me use this one as an example of a bearish doji candle. Now, if you let me zoom it clearly. So this is an example of a bearish doji candle. Right, this is an example. So if you look at the market was kind of pulling down from this point here, right? It was creating this here. It was pulling down and then it's formed at the bottom of the downtrend, meaning that this bearish doji candlestick form at the bottom of an uptrend. And then look at what, because now like the moment this candlestick pattern form is signifying that there's indecision in the market between buyers and sellers. So when it form now, there's indecision in the market. And I told you when a bearish doji candlestick form at the bottom of a downtrend, it may signify that a reversal might happen. And this is what happened. When it's forming, look at what price started doing now. Price started pulling up, right? Price started pulling up after this formed here, right? After the formation of it, if you notice the price started pulling up. So this is an example of a bearish doji. Same thing with the bullish, right? Same thing with the bullish. When it happened, it's also signal that, okay, this is an example. Let me use this one as an example of a bullish doji. So we can use this one as an example. Right? We can use this one as an example. Sorry. I use this one as an example. Let me see if I can reduce the one. Okay, so now this is an example of a bullish doji, right? This is an example of a bullish doji. Well, let's see if we can use the one that possibly may reversal based on their call. So if you look at this point here, so I'm still going to use this. I'm going to use this one as this bullish doji now. So you can, if you notice, price was kind of going down at this point here. So price was pulling down here, right? It was pulling down like this, and then this doji form, meaning that there's indecision in the market. Now, market is trying to see what direction is going to go, and the moment it's formed, right? The moment for look at what happened now. The market started pulling up, right? The market started pulling up because of this doji. So I told you when it's happening in the bottom of a downtrend. So sometimes, like now, what we see here is a bullish doji, right? Because I told you, it depends on how you do your chart. But here, what we saw here was a bearish doji. But most of the times, it don't even really matter. But for it to be more effective, right, it has to form based on color. So if it's like based on the color of the candlestick, what I mean, like call of candlestick, for a bearish doji should happen at the top of an uptrend, while a bullish doji should happen at the down of at the bottom of a downtrend. But it doesn't really matter. Sometimes it can even form a bearish doji can form at the bottom of a downtrend and still pull up just like this, right? Just like this. So now let's move to the next candlestick pattern. Now the next candlestick pattern we talked about is dragonfly doji pattern, and then the gravestone doji pattern. So this is our dragonfly doji. It is same, it has that same criteria of the open, the high, the low, and then the close of a candlestick. So this is an example of a doji candlestick, of a dragonfly doji candlestick, and this is an example of a gravestone doji candlestick. So let me read a little definition about it so that you'll be able to understand it when I'm explaining the bullish. So a dragonfly doji is a bullish candlestick pattern which is formed when the open high and close are about the same or the same level in price. That's what a dragonfly doji. So it's a bullish do remember a dragonfly doji pattern is a bullish doji. It's a bullish candlestick pattern which is formed when the open high, which is this point here. This was our open. Let me zoom this. So when the open high, which is this was our open, right? This was our open, is close, is about the same level with the close price. So we open here, right? When open here, buyers, because this is a bullish doji, sellers say, oh no, 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 we're going to fight, we're going to push this market down, and then they push the price all the way to this down here, right? So this lowest point, the price went creating this long wick that you see here. So when they push the prices, buyer say, no, no, this is not going to happen. And then buyer were able to push it with all their strength to put here, it reaches here, and then price close at this point. So this is an example of a dragonfly doji. And the characteristics of a dragonfly doji is that a dragonfly doji it must have a long lower wick that shows that there's resistance of buyers which attempt to push the price up. Like this, what I mean. So it has for this to be called a dragonfly doji, it has to have a long lower wick like this for it to be called a bullish doji or dragonfly doji pattern. Same thing with the gravestone. So the gravestone is just similar to the bullish doji, but in this case the gravestone is the bearish version. You know, the dragonfly doji is a bullish, right? It's a bullish candlestick pattern. But for a gravestone doji, it's a bearish version of the doji, of the dragonfly doji. And it is formed also same thing when the high, that is the open and the close, are the same or about the same level in price. And what differentiates this gravestone doji from the dragonfly doji is their long wick, tail. So for a doji candlestick pattern or for a doji candle pattern, if you notice for a dragonfly doji pattern, it has a lower long wick, right? And it's a bullish doji, dragonfly doji. While for a gravestone, it has a long upper wick, right? Sometimes you can also see it like this, so it doesn't really matter. You can see it like this, right? You can see it like this, or you can even see it like this. So it just depends on how you see it. Why you can still see it like this, even with little to no wick at the top. You can still see it like this. So we'll just try to identify it. You must not see it exactly the way I'm doing. You can see it like this, whereby it's not showing any wick down. Why you can see it maybe a very little wick, or you can see it like this. But the thing is that let them just be this long wick, long big ass wick like this that mean that okay, yes, this is trying to tell you that there's differences between the dragonfly doji pattern and the gravestone doji. So for a dragonfly doji, the open and the high, that is the open and the close, are about the same or the same level in price, but it is characterized, a dragonfly doji is characterized as when it has a long lower wick. And mind you, a dragonfly doji pattern is a bullish, remember, it's a bullish candlestick pattern. While for a gravestone candlestick pattern, it's a bearish doji, meaning that it's telling you that it has, for it to be considered as a gravestone doji, it has to have this long wick, and the open and the close of that candlestick have to be about the same or even the same level in price, right? So this was our open, right? This was where we open in this price. And then, I told you for every candlestick that is formed, there's always a fight between buyers and sellers. Now, when the price open at this point, because we're going down in price, when it opened here, buyers said, oh, no, we're going to push the price all the way. They push the price all the way to this top. That means at some point in time, this price went to this point, right? It went to this point at some point. But then what happened? The sell started happening. There was a massive selling pressure for it to push the price all the way to this bottom here, right? They push the price all the way, and then buyers step down, push it just a little, and then the price closed here based on that time frame, right? And one thing about um, this doji pattern, for the dragon doji pattern and the gravestone doji, is that when they happen either at the top of a uptrend or the bottom of a downtrend, it also signifies that a reversal might happen in the market. So I'm going to give an example of a doji, of a dragonfly doji, to signify that when this thing happen at either at the top of an uptrend or at the bottom of an uptrend, there's always a reversal that might happen in the market. As I said, you can't trade this candlestick alone. Based even the bearish, the engulfing candle, whether the bullish or bearish, the doji itself, or the dragonfly, or the gravestone doji, you cannot trade these patterns alone. You will need some other, like maybe indicators or some other tools for you to be. And you don't just see this pattern and decide, okay, yes, I've seen this thing. This thing, someone told me, or my mentor told me that it's going to reverse, and then you enter the trade. No, you are going to lose. We are going to make the whole of. We are going to just do nonsense. So always wait for other confirmation, which I'll be talking about those things later on as we move ahead, right? And whenever you see those things, like telling you that, okay, this thing might not, for instance, if a doji candlestick form, it might be telling you that, Kai, there's something that's resisting this candlestick from pushing all the way down. So and when it happens at um the bottom of a downtrend, it signifies that a reversal might happen, meaning that there's something supporting it for it not to continue going down. So there's a lot of now buying pressure to push the price up. So let's give an example of a doji, of a dragonfly doji on the chart. So of a dragonfly doji. Let's give an example of a dragonfly doji. Okay, let's use the 15 minutes. See if we can. So this is an example. So this is an example of a this is an example this is an example of a dragonfly doji. So let me zoom it more. So this is an example of a dragonfly doji. You can see there's this strong, let me delete this. There's this strong, massive buying pressure that happened here. You can see it was able to push the price all the way to this top here. So let's say the psychology of the formation of this candlestick, right? Price open at this point, right? Price opening at this point. So when price open here, this was where price open. Price open at this point, right? And then when price open here, seller step into the market, they push the price all the way to this top here, to this bottom here. And this happened at the bottom of a downtrend. They push the price to this point here, but they could not continue pushing down. And then sellers, because buyers now, when this thing happens, it signifies that there's a lot of buying pressure for the price way to push all the way to this top here and close above. That means there's a lot of buying pressure to push the price all the way to this top here, because I told you it's a fight between buyers and sellers. If buyers are much more are buying more than sellers are selling, of course the price is going to go up. And if sellers are selling more than what buyers are buying, the price is going to go down. So you can see it was previously on a down. It was previously coming down, like the trend was previously coming down here, right? If you notice, the trend was coming down, right? It was coming down like this, right? And then it's formed at the bottom of a downtrend. Like that is for the dragonfly doji. It's formed at the bottom of a downtrend, which signifies that a reversal might happen, and then buyers now have stepped into the market with full force, that they are going to, there's now a lot of buying pressure here. And then the moment the candlestick form, if you notice, the price started pulling up, right? Started pulling up. So this is an example of a dragonfly doji. So for a so let's give an example for a bullish let's give an example for a gravestone doji. Let's give an example of a gravestone doji. I think that should happen on the 1 hour. Okay. So let's give an example of a gravestone doji. Now, this is an example of a gravestone doji, right? This is it here. So if you look at the looks, it's the same, almost the same to this one. So you can see the formation of how this gravestone doji. And I told you when either dragonfly or gravestone doji forms at the top of an uptrend or the bottom of an uptrend, it also signifies that a reversal might happen in the market, right? So if you look at, it was pulling up here, right? It was going up, going up, going up, going up, and then this happened. It formed at the top of this of the uptrend, which is a gravestone doji. And the moment it formed, you can see the market started reversing. The market started reversing down. So, but still, you don't just trade these patterns when you see them, when they just occur in the market. Don't just trade them like that. Don't just trade them like that. You allow it, you compare them with other tools, like other indicators or other tools, so that you can get a very high way. So you don't just trade this pattern whenever they occur in the chart. So this is an example of a gravestone doji, and the moment it formed at the top of an uptrend, you can see a reversal already happening in the market. A reversal happening. So same thing with the gravestone doji. So let's just do a recap of what we talked about today. Let's do a recap of what we talked about today. So we started from doji candle, where we talked about the bullish doji candle and the bearish doji candlestick. And I told you that every candlestick must have a high, a low, a open, and a close price. So this is an example of a bullish. And I told you when a bullish candle, a bullish doji candlestick form, it's maybe at the top of an uptrend. It's sorry, at the bottom of a downtrend. It's right that a reversal might happen in the market. There's possible reversal, and whenever this doji candlestick form, it's telling you that there's indecision in the market. Like there's indecision between buyers and sellers in the market. So same thing with the bearish doji. When it forms at the top of an uptrend, it signifies that a reversal might happen in the market. And always note that the open and the close are about the same level in price. Like they're about the same level. So when they form, just know that, okay, this is about the same level. That is open and the close are about the same level. It's telling you that there's indecision in the market. There's indecision in market between buyers and within sellers. So So the next one we move to is Dragonfly Doji and the Gravestone Doji. And we talked about the Dragonfly Doji. It's that the open and the close. It's a bullish for a Dragonfly Doji. It's a bullish doji or a bullish candlestick that whereby the open and the close price are about the same or even the same level in price. So you can see this was our open, this was our close. So they're just about the same level in price. And then for it to be characterized as a Dragonfly Doji, it has to have a long lower wick for it to classify as a Dragonfly Doji. And whenever this Dragonfly Doji pattern happen at the bottom of an uptrend, it signifies that there might be a reversal that might be happening in the market. So there's a lot of buying pressure here because this price at some point, right? At some point in the market, sellers were able to push this price after the open. They were able to push this price to this point, right? They were able to push the price to this point here. But now buyers stepped into the market with there was a lot of buying pressure for them to push the price for them to push the price all the way to this top here, for them to push the price all the way to this top here, and then they close at this point. This is an example for a Dragonfly. This is an example of a Dragonfly Doji pattern. Then an example of a Gravestone Doji is that same thing, the open and the close are about the same level in price. But always note that when this thing happens, there is it must for this to be characterized as a Gravestone Doji, it has to have a long upper wick. It has to have a long lower upper wick for a Gravestone Doji. So this was the open of this price. This was the open. This was the open of this. This was the open of this Dragonfly Doji, and then at some point buyers stepped into the market, push the price all the way to this top here. So this is the highest point the price went to, and then sellers stepped into the market. There was a lot of selling pressure because when this thing happened, when this doji, Redstone Doji happened at the top of an uptrend, it signifies there's a lot of selling pressure and there's possible reversal that might happen in the market. That means if the market was going up, if this doji, Gravestone Doji happened at the top of the uptrend, there's possible reversal that it will start pulling back down, which I showed the example of it on the chart. So, and for it to be characterized as a Gravestone Doji, it has to have a long upper wick, right? It has to have a long upper wick. So same thing with the Dragonfly Doji. For it to be characterized as a Dragonfly Doji, it has to have this long lower wick. And mind you, when this thing happen, either when this Dragonfly Doji pattern happen at the bottom of an uptrend, it signifies that buyers are now in charge of the market and there's possible reversal that might happen. So if the price was coming down and this Dragonfly Doji pattern forms, there's high possibility that the market will start pulling up. That means it will start reversing from down and it might start pulling up. But I told you, don't just trade these patterns when you see them in the market. You need to have other confluences, other things that can support you whether to enter for that trade. So this will be stopping for today. Right, I'll send the recordings to the group, and then tomorrow we're going to continue to see what we can cover. We're going to talk about other candlestick patterns. Right, so you can watch the video over again. To if you have any question, please you can send it to the group. I'm going to answer every question you have. So just watch the video over and over again for you to understand, right? So this is an example of a doji, of a Gravestone. So if you notice, the market was pulling up here, right? It was going up like this, and then the moment it's formed, the moment this Gravestone formed at the top of an up, you can see it's at the top, and then immediately there was a reversal that happened. The price started pulling down. So when it forms at the top of an uptrend, which is the Gravestone, there's high possibility that a reversal might. So there was a lot of selling pressure, right? There was a lot of selling pressure here for it to be able to close. So meaning that sellers are now in charge of the market at this particular time, and they were able to push this price from this point here, right? They push this price all the way to this down here, right? They push the price all the way to this point here. So you can see there's a lot of selling pressure the moment the Gravestone Doji forms. So same thing with the Dragonfly Doji. When it happens at the bottom of an uptrend, it signifies that there might be a reversal. It might be that there might be a reversal and it might start pulling up. So we'll be stopping here today, guys. Tomorrow I'll still send the same I'll be sending the recordings to the group on Telegram, right? I'll be sending it on Telegram, so you can just, so again, if you have not watched the first class, so you can actually watch the first class. Let me just so let me show you where you can get it from. Okay, so I'll show you the first video we need to watch before you watch this one. So um, this is the first, but you can also get to watch this one to understand the um like the beginning of trading, what is trading, how do you trade forex, all those things. So you can learn it at this in this video here, this beginner journey to forex trading part 1, and then you can also learn the step by step. I was actually explaining how to calculate, how to make money in the financial market. So this is where the introduction to candlesticks started from. So you can watch this video, right? Let me play it. So I discuss here about the candlestick, so you can watch it. This was the part 1, right? This was the part 1. Please don't forget to like and smash the subscribe button, right? We are going to continue bringing you more content like this. I'm going to continue bringing more content, so don't forget to like, comment, and smash the subscribe button. So before you watch this video, make sure you watch this introduction to candlestick part 1, and then part 2. I will also bring in part 3, part 4 till we cover up the whole entire academic structure we have. So with that being said, guys, I'll see you in the next class. Peace out.